Hello students, so now we have reached to question number 12 of amalgamation. All of you must be getting a lot of confidence with that now, okay? And you must be in a position to do the questions on your own also. See that generally you keep trying the things on your own. Let's take up with this question here also wherever required. As I suggested in past lectures, try the workings on your own, accounting part on your own, and then just play the video and verify whether you could get it correct or not. Now question 12. Amar Limited agreed to acquire the business of Kumar Limited. Now Amar Limited is acquiring means you can say that Amar Limited is a transferee company. Okay, Amar Limited is acquiring. So Amar Limited is a transferee company, purchasing company, and business of Kumar Limited is acquired means Kumar is going into liquidation. So that is transferor company as on 31st March 2019. Following are the assets and liabilities of Kumar Limited. Balance sheet is always given generally of transferor company, that also you can keep in mind, as on 31st March 2019. Equity share capital rupees 10 each, fully paid up 3 lakhs. So 3 lakhs divided by 10, 30,000 equity shares would be there. General reserve 80,000, workman's compensation fund 5,000, P&L account 55, debentures 50,000 and creditors 10,000. Assets side goodwill, land and building, stock in trade, debtors and cash and bank. Now other information, the consideration payable by Amar Limited was agreed as under. Cash payment equivalent to rupees 2.5 per share, means for every share of rupees 10 in Kumar Limited. Further, issue of 45,000 rupees 10 shares fully paid in Amar Limited having an agreed value of 15 per share. Now we have done this a lot. 5 rupees is premium. Agreed value is 15 rupees means 5 rupees is the amount of premium. Issue of such an amount of fully paid 5% debentures of Amar Limited at 96%. Now issue at 96% means you are going to issue the debentures at 4% discount, as is sufficient to discharge the 6% debentures of Kumar Limited at a premium of 20%. I have told you this in earlier questions also. Discharge means it will give us the agreed value, and 20% more. Premium means agreed value is 20% more. Okay, premium means agreed value is 20% more than the book value. 6% debentures you all can see are 50,000. Agreed value they are going to be discharged at premium of 20%. Means you'll pay them 20% more, 10,000 more, that is 60,000. And how will you pay that 60,000? By issuing the new company's debentures at 4% discount. We'll see that in the workings in detail later. While arriving at the agreed consideration, the director of Amar Limited valued land and building at rupees 6 lakhs agreed value, stock in trade 71,000, and debtors at their book value subject to an allowance of 5% to cover doubtful debts. You all can see debtors are 18,000. 5% to cover for doubtful debts means 18,000 minus 5% BDR, that is 900. So 17,100 would be its agreed value. The cost of liquidation of Kumar Limited was 2,500, but paid by Amar Limited means transferee company. Amar Limited is paying it. So entry for liquidation expenses will come in the books of transferee company. On the date of acquisition, Kumar Limited had a liability towards workman compensation against injury. This amount was ascertained at 3,000. So we have done this in past questions also. Out of workman's compensation fund of 5,000, 3,000 is our liability, and only 2,000 stands in the nature of reserves that will be transferred to equity shareholders account, and 3,000 will be a liability. Further, the company paid the compensation in cash to the worker. We have done this earlier. This 3,000 of liability is paid in cash. So it's a liability not taken over by transferee company, and old company, transferor company itself will discharge this liability. We have done this earlier. In this question, you'll make the ledger account of workmen compensation fund also, and you'll make the ledger account of cash and bank also. Amal Limited also issued to public 5,000 shares of 10 each at rupees 15 per share. So these are also issued at premium. And the shares were fully subscribed and paid for. Now you are required to draft, what all we have to do? Journal entries and also prepare ledger accounts in the books of Kumar Limited. Very big question. And then also pass the opening entries in the books of Amar Limited and also prepare its opening balance sheet. In short, everything is asked in this question. Journal of transferor, ledger accounts of transferor, journal of transferee, balance sheet of transferee. You can view this question in parts, in installments, because it's a very lengthy question. You can pause and take a break of 5, 10 minutes, 15 minutes after every part is over. First of all, we need to decide 3 things in this question. By now you all must be very confident with that. Is it merger or purchase? Second, method of purchase consideration. And third, if it is merger, then we will follow pooling of interest method in the books of transferee company. If it is purchase, then we will follow purchase method of accounting in the books of transferee company. Now what are the 3 conditions of merger? First, all the assets and liabilities must be taken over. Workman compensation fund liability is not taken over. It is paid in cash to the worker by transferor company Kumar Limited itself. So it is not a merger, it is a purchase. Here itself we conclude. Other reasons are also there. At book value, but there are agreed values given for land and building and stock in trade. Entire purchase consideration should be settled in shares, equity shares, but cash is also paid. So all the 3 reasons are responsible. It is not a merger, it is a purchase. Which method of purchase consideration? Net payment method. From adjustment 1 and 2 we can find this. Okay, net payment method of purchase consideration. 2 modes of payment are given: cash, equity shares, and no details are missing. All details are there. And because it is purchase, in the books of transferee company we will follow purchase method of accounting. Now all of you understand this question, you all need to try on your own. So solution I am keeping ready in front of you. Okay, and I will just be explaining that solution. All of you first try on your own and then you play the video and verify you could get it or not. Okay, because it's a very long question, so many things are asked. As you can see, journal entries also, ledger accounts also, again journal entries in the books of transferee company, again opening balance sheet. So I am keeping the solution ready in front of you. All of you try the things on your own, working by working. Then you play the video and verify whether you got it correct or not. So first working all of you should have done for debentures. All of you put the video on pause and do the debentures working on your own, and then play the video and verify you could get it correct or not. So in the question it is given that issue of such amount of 5% debentures of Amar Limited at 96% as is sufficient to discharge 6% debentures of Kumar Limited at a premium of 20%. Now discharge debentures at premium means debentures are 50,000. 20% premium means 20% more value. So all of you check your working note 1. It should be 6% debentures of Kumar Limited 50,000 plus 20% more premium 10,000 means its agreed value is 60,000. Now since we are issuing 5% debentures of Amar Limited but at 4% discount, this 60,000 you will divide by 96 rupees. 100 minus 4% discount, issue price is 96, and you all must have obtained 625 debentures. Okay, now again all of you pause the video, try working note 2, purchase consideration by net payment method on your own, and then play the video and verify you got it correct or not. Okay, so pause the video and try the workings of purchase consideration on your own. Now, see the working note to purchase consideration by net payment method. We all get it in adjustment 1 and 2. In adjustment 1, cash payment equivalent to rupees 2.5 for every share of rupees 10 in Kumar Limited. In Kumar Limited, there are 30,000 shares. So 30,000 into 2.5, 75,000 is paid in cash. Working note to purchase consideration by net payment method, modes of payment, cash, 30,000 shares into 2.5, 75,000. Same way from adjustment 2 you will get issue of 45,000 shares of rupees 10 shares fully paid in Amar Limited but having an agreed value of 15 rupees. So 45,000 into 15 we will take at 15 rupees. Directly the number of shares are given. So equity shares mode of payment, 45,000 equity shares of 10 each but at rupees 15, you must get 6,75,000. Purchase consideration 7,50,000. So all of you must have got these two workings correct. If not got it, you can rewind the video and play it again and understand what I have explained. Now what I want is all of you make the format of journal entries of the books of Kumar Limited around 1.5 page. Make the formats of realization account half page, equity shareholders account around 8 to 10 lines, then Amar Limited account 4 lines, equity shares of Amar Limited account 4 lines, workers compensation fund account also 4 lines, and cash and bank account 5 to 6 lines. 6 ledger accounts. I repeat, realization account half a page, equity shareholders account around 8 to 10 lines, Amar Limited account 4 lines, equity shares of Amar Limited 4 lines, workers compensation fund 4 lines, cash and bank account 5 to 6 lines. Make this journal format and ledger accounts format, then only you play the video. And again, try every entry on your own and then you play the video and check whether you have done that entry and posting correct or not. Okay, so play the video but to verify whether you are able to get it correct or not. Pause the video and make the formats. Now check your entries everyone. First entry, realization to assets. Remember, first 6 entries we will pass at book values only. So realization account debit to assets means to goodwill 50,000, to land and building 3,20,000, to stock 84,000, to debtors 18,000, to cash and bank 28,000, and realization debit with total of 5 lakhs. All of you check this entry. You can pause the video and check this entry whether you got it correct or not. Realization account debit 5 lakhs, to goodwill 50,000, to land and building 3,20,000, to stock 84,000, to debtors 18,000, to cash and bank 28,000, being assets transferred to realization account. Now it's posting. All of you should have tried on your own, then only you play the video and verify it. Realization account debit. So all these will come in realization account on debit side. All of you check this, realization on debit side. 2 assets account in that, goodwill 50,000, land and building 320, stock 84, debtors 18, cash and bank 28, total 5 lakhs. Now only cash and bank account we are making. So in cash and bank account, all of you check it. First you write opening balance of 28,000 and credit side we have transferred to realization account. So by realization account 28,000. First entry is done. Now again all of you try second entry on your own first, then do its posting also, then play the video and verify you got it correct or not. Check it. Liabilities, only liabilities taken over are transferred to realization account. So this workers compensation liability 3,000 will not be included in second entry. The liabilities taken over are debentures and creditors. So liabilities account debit means 6%, debentures account debit 50,000, creditors account debit 10,000, to realization 60,000. Check your entry everyone. 6% debentures account debit 50,000, creditors account debit 10,000, to realization account 60,000, being liabilities transferred to realization account. Wherever required you can pause the video and write it down if there is any mistake. Now two realization accounts. So in realization account on credit side, check your posting. By liabilities account, in that 6% debentures 50,000 and creditors 10,000. So second entry is also done. Now all of you try the third entry on your own. Then you play the video and verify you got it correct or not. Third entry is for equity share capital. So equity share capital account debit, all of you can see, is 3 lakhs to equity shareholders account 3 lakhs, being equity share capital transferred to equity shareholders account. Now to equity shareholders account. So in equity shareholders account, all of you do the posting on credit side by equity share capital account 3 lakhs. Now preference share capital we don't have. So next entry should be directly of reserves and surplus. All of you try the entry and posting of reserves and surplus on your own. Then you play the video and verify you got it correct or not. See, it should be reserves and surplus means general reserve account debit 80,000. Workmen's compensation fund only 2,000 is in the nature of reserves. So workmen compensation fund debit 2,000. Profit and loss account debit 55,000 to equity shareholders account. Check it up. General reserve account debit 80,000. Workmen compensation fund account debit 2,000. Profit and loss account debit 55,000 to equity shareholders with total of 1,37,000, being reserves transferred to equity shareholders account. Now here you can pass a combined entry also. Third and fourth can be combined into one entry. In that situation, the entry would become, in your exams you can do this also. Equity share capital account debit 3 lakhs. General reserve account debit 80,000. Workmen compensation fund account debit 2,000. Profit and loss account debit 55,000. And to equity shareholders straight away with 4,37,000. Now check its posting. To equity shareholders. So equity shareholders account on credit side by general reserve 80,000, by workmen compensation fund 2,000, by profit and loss account 55,000. Okay. We don't have any fictitious assets, that is other non-current assets or other current assets item in the balance sheet. So straight away we take up with the closing entries are done. Now we take up with purchase consideration. I repeat, everywhere pause the video, try the entry on your own, play the video, verify you got it correct or not. So purchase consideration we have calculated in the working note as 7,50,000. All of you can see that it's in working note too. 7,50,000 we have calculated as purchase consideration. So the entry for purchase consideration will be transferee company, that is Amar Limited account debit 7,50,000 to realization account 7,50,000, being purchase consideration due. Now to realization account. So in realization account on credit side by Amar Limited account 7,50,000 in bracket purchase consideration working note 2, and Amar Limited account debit. So Amar Limited account debit side to realization account 7,50,000. I repeat, wherever required you can pause the video and do it on your own if there is any correction. After that, purchase consideration receipt. Now you all can see how is this 7,50,000 receipt. 6,75,000 in the form of equity shares and 75,000 in the form of cash. So all of you check it up. Cash comes in, debit what comes in, cash and bank account debit 75,000. Equity shares comes in, debit what comes in, equity shares of Amar Limited account debit 6,75,000. Amar Limited is the giver, credit the giver to Amar Limited account 7,50,000. Now to Amar Limited account. So in Amar Limited credit side by cash and bank 75,000 and by equity shares of Amar Limited 6,75,000. Cash and bank account debit. So cash and bank debit side to Amar Limited 75,000 and equity shares debit. So equity shares of Amar Limited debit side to Amar Limited account 6,75,000. Next, after purchase consideration receipt, sale of assets not taken over. We don't have, all the assets are taken over. Payment of liquidation expenses we don't have because liquidation expenses are paid by transferee company. Then payment of liabilities we have. this workers compensation of 3000 is paid. So for that, all of you check your next entry must be workman compensation fund account debit 3000 to cash and bank account 3000, being workers compensation paid. Now workman compensation fund account debit to cash and bank. So workman compensation fund account debit, first of all, credit side opening balance 5000 and opening balance, all of you write on 5000. Debit side to cash and bank account 3000. Okay, to cash and bank 3000. And okay, workman's compensation fund account debit side, all of you should have to equity shareholders account 2000. Okay, this 2000 what is transferred to equity shareholders will also come in workman's compensation fund on debit side to equity shareholders account 2000. That will come along with the entry of reserves itself. This entry what we had passed, fourth entry. As per the fourth entry, workman's compensation fund account debit side also you must write to equity shareholders account 2000. Now it's payment workman's compensation fund account debit side to cash and bank account 3000 and cash and bank account credit side by workman compensation fund account 3000. Okay. After workman compensation funds payment, you remember the steps I told you, realization will be transferred to equity shareholders account. So all of you do the balance of realization account. See credit side 50,000 plus 10,000 plus 7,50,000, that is 8,10,000, right, both the sides. 8,10,000 minus 5 lakhs, 3,10,000 is transferred to equity shareholders account. And opposite side in equity shareholders account by realization account 3,10,000. Now what will be its journal entry? Since in realization account we write on debit side realization account debit, since in equity shareholders we write on credit side to equity shareholders account credit 3,10,000. So all of you check your entry for transferring this profit. Realization account debit to equity shareholders account 3,10,000. This should be your entry. Okay, realization to equity shareholders 3,10,000 being profit on realization transferred to equity shareholders account. Now after that, whichever other accounts balances remain, you'll transfer to equity shareholders account. So Amar Limited gets closed 7,50,000 both the sides. Okay, Amar Limited account gets closed with 7,50,000 on both the sides. Equity shares of Amar Limited, all of you transfer it to equity shareholders account 6,75,000 total, and same is the balance. So equity shareholders debit side to equity shares of Amar Limited 6,75,000. Workman compensation fund account gets closed. Cash and bank account 1,03,000 minus 28 minus 3, 72,000 all of you transfer to equity shareholders account. So equity shareholders on debit side to cash and bank 72,000. Here you must mention balancing figure. And then equity shareholders must tally. So 675 plus 72, all of you check 7,47,000 on both the sides. For this the entry will be equity shareholders account debit. Okay, equity shareholders account debit. To equity shares we are giving of 6,75,000, and to cash and bank, how much cash and bank we are giving them? 72,000. And equity shareholders account will debit with 7,47,000, being payment made to equity shareholders. Okay, being payment made to equity shareholders. Total must come to 33,32,000. Verify that everyone. So all the accounts get closed. Now entries in the books of transferee company. Again, all of you try on your own. Then you play the video and verify whether you got it correct or not. You all will make one workings also of goodwill. Net assets will be compared with purchase consideration. First find the goodwill. Then you pass the entries. Then you make the notes, then you make the balance sheet. Then you play the video and verify you got it correct or not. So pause the video, do everything on your own, then play the video and verify the things. Check your workings first. Agreed value of assets taken over. Land and building, all of you will find the agreed values in the paragraph here. Land and building is 6 lakhs, stock is 71,000. Debtors, we discussed 5% allowance, so 18,000 minus 5%, 7,100. Goodwill is not to be taken in this workings because goodwill is what we are finding. And cash and bank will take 28,000 itself. So check your workings, all of you. First we find net assets, agreed value of assets taken over. Land and building 6 lakhs from paragraph, stock 71,000, debtors 17,100, cash and bank from balance sheet itself 28,000, total 7 lakh 16,100. Now agreed value of liabilities taken over in working note 1, you can see the liability debentures value is 60,000. So 6% debentures 60,000. Creditors at book value itself 10,000, so 70,000. 7 lakh 16,100 minus 70,000. Net assets are 6 lakh 46,100. Against that we are paying purchase consideration of 7 lakh 50,000. So goodwill is 1 lakh 3,900. Now all of you check your entries whether you got it correct or not. Business purchase account debit with purchase consideration 7 lakh 50,000 to liquidator of Kumar Limited 7 lakh 50,000 being business of Kumar Limited purchased. Then from second entry directly, land and building account debit 6 lakhs, stock account debit 71,000, debtors account debit 17,100, cash and bank account debit 28,000, and goodwill account, don't forget, from the working 1,03,900 to 6% debentures 60,000, to creditors 10,000, and to business purchase account from the first entry itself we get 7,50,000 being assets and liabilities of Kumar Limited taken over. You can cross check the total of debit and credit will also come equal of this entry. Now next entry is payment of purchase consideration. So this liquidator of Kumar Limited 7,50,000 you will reverse and debit in this entry. Now see the working note 2, how is it paid? To cash and bank account 75,000, to equity share capital with 45,000 into 10 rupees of face value 4,50,000, and to security premium with 45,000 and 5 rupees of premium, that is 2,25,000. So liquidator of Kumar Limited account debit 7,50,000 to cash and bank 75,000 from second working, to equity share capital 45,000 shares into 10 4,50,000, to security premium same 45,000 shares into 5 2,25,000. After that shares issued in the public issue is also there given. All of you see the question. Adjustment, last paragraph. Amar Limited also issued to public 5,000 shares of 10 each at rupees 15. Here also 5 rupees premium is there. 2 entries will come for this. Check it in your notebooks. Bank account debit to equity share application and allotment account 5,000 into 15 rupees they are issued, so 75,000 being application money received. Then equity share application and allotment account you will debit and close with 75,000. To equity share capital you will transfer face value 5,000 into 10 50,000. To security premium account 5,000 into 5 of premium 25,000 being application money transfer. Then after public issue we have liquidation expenses. See in the question it is given cost of liquidation of Kumar Limited was 2,500 paid by Amar Limited. So for liquidation expenses, since we have goodwill here, the entry will be goodwill account debit 2,500 to cash and bank account 2,500 being liquidation expenses of Kumar Limited. Then lastly, settlement of liability. First this 6% debentures account 60,000 you reverse and debit and close. 6% debentures account debit with 60,000. Now in the new company all of you can see here 625 debentures are issued. So discount 4 rupees will be how much on that to be debited. Discount on debentures you will debit with 625 into 4, 2500. And new company is giving to 5% debentures with face value 625 into 100, 62,500. Being 5% debentures issued against 6% debentures. And then you do the total of journal, it must come to 23,10,000. After that, all of you make a blank format of balance sheet and we will make the notes first. Check your notes first, everyone. Again, pause the video, try the things on your own and then you play the video and verify. First note, share capital. Authorized capital is not given in the question, so question mark and double underline. Issued, subscribed and paid up capital. Now understand this properly, everyone. From entry number 3, we have 45,000 shares of 10 each. From entry number 4, we have 5,000 shares issued of 10 each. So this 45,000 plus this 5,000, we will write total 50,000 equity shares of 10 each, 5 lakhs. And you will mention in that this 5,000 shares are issued for cash, but this 45,000 shares which are issued to Kumar Limited, they are issued for consideration other than cash. So you will write that in the note in bracket. Of above, 45,000 equity shares are issued to Kumar Limited for consideration other than cash. Total 5 lakhs. Now all of you check security premium. In entry number 3, we have security premium of 2,25,000. In entry number 5, we have security premium of 25,000. So 2,25,000 plus 25,000. Security premium will come in reserves and surplus 2,50,000. Okay. There is no other reserves and surplus in the journal entries. Shareholders funds includes share capital and reserves and surplus. Second, in the balance sheet, we have non-current liabilities in that long-term borrowings. Now, as per the last entry, this 6% debentures account already gets closed here. So now in the new company, we have which debentures? 5% debentures. With what value? 62,500. So long-term borrowings, 5% debentures, 62,500. Then in current liabilities, short-term borrowings we don't have. Trade payables, creditors you get from second entry directly 10,000. Check it, everyone. Creditors 10,000. Then we don't have short-term provisions and we don't have other current liabilities. So straight away we go to assets. Non-current assets. In that we have tangible fixed assets. Only one tangible fixed asset is there. Only one tangible fixed asset is there, that is land and building with 6 lakhs. So that will come in tangible fixed assets note 6 lakhs. Then intangible fixed assets, all of you can see. In entry number 2, we have goodwill of 1,03,900. And also in entry number 6, we have 2,500 for liquidation expense. So 1,03,900 plus 2,500. Intangible fixed asset goodwill will come 1,06,400. Okay, all of you verify that. Then this is important. This discount what we got in the last entry. Discount on debentures 2,500. That will come in other non-current assets. So after intangible fixed assets, we don't have non-current investments. We don't have long-term loans and advances. Directly other non-current assets, discount on debentures 2,500. Then in current assets, we don't have current investments. Inventories. So inventories will include this stock of 71,000. Okay, inventories will include this stock of 71,000. Then trade receivables will include this debtors of 17,100. So trade receivables debtors 17,100. And cash and bank, all of you remember that debit amounts you will add and credit amounts you will minus. So this cash and bank 28,000 debit you will plus Then this bank account 75,000 debit you will plus. Then this cash and bank 75,000 credit you will minus. And this cash and bank 2,500 credit you will minus. So debit amounts 28,000 plus 75,000, credit amounts minus 75,000 minus 2,500. Check this. 28,000 plus 75,000 debit gets added, minus 75,000, 2,500 credit gets subtracted, 25,500. Now in the balance sheet format which you have made, you have to do fill in the blanks. So shareholders funds, share capital from note 1, 5 lakhs, reserves and surplus from note 2, 2,50,000, total 7,50,000. Non-current liabilities, long-term borrowings from note 3, 62,500. Short-term borrowings nil. Trade payables from note 4 you have 10,000. Other short-term provisions and current liabilities nil, total 10,000. Total of liabilities 8,22,500. Now in non-current assets, fixed assets, we have tangible fixed assets 6 lakhs. Intangible fixed assets, we have 1,06,400 by note 6. And non-current, make it non-current assets, other non-current assets. Okay, it should be other non-current assets. We don't have non-current investments here, so other non-current assets, that comes to 2,500, that is discount on debentures. Total non-current assets 7,08,900. Inventories, we have 71,000. Stock, that is from note number 7. Trade receivables from note 8, we have 17,100. Cash and cash equivalents from note 9, we have 25,500. Total 1,13,600, and again total 8,22,500. So this question I particularly wanted all of you to try on your own. That's why ready-made solution was there. If any doubts are there, we will take it up in the live session. But you can pause the video, rewind, and understand the concepts again in case if you have any doubts. Explanation is thoroughly done. Bye everyone. See you in the next lecture. Take care.